Welcome back to Business Week on Arise News. I'm joined now by Steve Osho, co-managing partner, Commercio Partners Limited, to review some of the big global headlines of the week. And of course, a big headline for us here in Nigeria, Steve, is the budget. Yep. The budget was increased almost overnight in December. Yeah. And we sort of woke up to the news, I think it was December 30 or 29, and now we're at 28 trillion naira. Yep. The president has assented to it. Good, very early on in the year. What are your thoughts on the budget?
Yeah, I think, well, let me say good morning first and Happy New Year, and it's my pleasure to be here.
Same to you.
All right, I think the adjustment was mainly about 1.2 to 1.3 trillion.
Yes.
In my own assumption, I assume because even though the reason given was before that, they're trying to increase the GOE's numbers. That's most of the government enterprises.
Yeah.
Yeah, but at the same time, if you look at the adjustment that happened between the 750 benchmark in terms of naira to dollar to 800, I assume that that transmission between that, 750 to 800 naira for dollar will probably account for that differential.
That increase.
Yeah, exactly.
That increase.
Yeah.
Oh, the adjustment in the exchange rate, realistic adjustment, or should it have been a lot more? What are your thoughts? Giving some of the market predictions that are coming out across the board.
One thing that I've actually found out over time in Nigerian budget is that even though we have that increment, for the past 5 years now, you've seen that increment from year to year. But I still believe that the budget we have is not enough to actually cater for the needs of the people and some of the infrastructural gap that we have in the economy. If you look at the allocation that was given to health sector, infrastructure, education, it's still below 10% of the total budget. While defense actually got maybe roughly around 12 to 13%. So if you are trying to improve on the infrastructural gap we have and all those improvements that we need in health sector and education, I still believe those transmission is actually very, small. But if you look at the assumption of the budget itself, some of the budget assumptions are actually very good. And some of the assumptions, you wonder how we're going to achieve this number.
Yeah.
28.7 trillion, fantastic, considering the fact that in 2023, we did about 24 trillion. So about 4 trillion increase from what we did in 2023. But if you look at the benchmark from the inflationary target, 21%, from the current level that we have, the upper region of 21, close to 30 now. You wonder how that's going to be achieved.
How quickly we're going to get to that mark.
And considering the fact that, the CPI index basket composed of about 50% in food, and you see how the increase in price of food have actually gone up due to insecurity issues and, cost of transportation and all of that. So those are the areas that I have problem with in terms of the budget itself. Then if you look at the production in oil, because if you look at the revenue projection, 18.7 trillion thereabout, aggregate, revenue, and bulk of that is going to come from oil production. Non-oil, account for some percentage, but if you look at that number, almost triple time the size we got in 2023 for the oil receipt. And considering the fact that November data that came out, we still had production around 1.3 million barrels per day, and the budget at 1.78 million barrels per day. How are we going to achieve that?
Yeah.
And considering the fact that OPEC has actually cut the, our quota to 1.5. So for me, these are the challenges and area that I look at. I know there's been a lot of improvement in terms of revenue from tax, and I've seen that the government is trying as much as possible to increase the dragnet and at the same time go auto into collection.
Yeah.
But we need to look at other areas of generating taxes.
Yeah. And you talked about the FX rate, you talked about oil production. I want us to talk about the Afrexim NNPC story because part of it involves pledging our crude oil in exchange for this loan. So that also plays into the dynamics of our total production capacity and what we're able to realize in receipts as opposed to loan servicing.
Exactly.
So tell us a bit about your thinking around the Afrexim NNPC deal.
Nigerian government has actually been on the drive to actually raise some dollar liquidity.
Yes.
So to support the supply that we've been having problem in the interbank market and all of that. The challenge that I have with that transaction is the fact that it's priced at 11.85, even though it's a 5-year.
The interest rates.
Yeah, interest rate is priced around 11.85. But if you look at the sovereign bonds, they are trading at sub 10. So you wonder, when they were doing the pricing, what are the mechanisms that they put in that? There's been a lot of debate about the commission charge, that, they paid about 10% thereabout, even though that's been adjusted or amended now to say it's 2% that they paid in terms of fees.
So all in, you're looking at about 13%. 13%.
I think that is actually very, very steep in terms of pricing. And if you look at the pricing in terms of oil pledge, 90,000
barrels a day.
Barrels a day. Aggregates about 146 million for the entire period of that transaction.
That's based on about $77 a barrel.
Exactly. If you look at that, aggregate comes about $12 billion.
Okay.
Right. If you look at the 77.79 that they use for the benchmark, that's roughly about 12 billion, and we're collecting about 3-point-something billion. So 3 times of 4 times, actually, of what we're paying back. So the question now is that the pricing, was it properly done?
Right.
So for me, that's where I have a problem with. Because if you talk about the bilateral and the multilateral loan, most of them are priced within the single-digit numbers. So even though the interest rate has gone up because of the Fed rate,
but they're priced within single digits because most of them are concessionary financing.
Yes.
Either from development finance institutions or emerging market countries.
I know that, but my point exactly is that even we're going to go above that, you can't be going over the sovereign risk bonds, which is trading below.
Fair
10%.
enough. I mean, I guess the principle behind the loan itself to clear the FX backlog, to stabilize the FX market.
Yes.
I guess you could argue that principle is sound. The end itself is sound, but the means is what you're sort of questioning.
The principle is sound, but how do we get that desperate to the point where the lender is actually trying to screw us in terms of pricing? That's number one.
Very strong.
Because that's what happened. Because if you look at the entire document, there's another clause in that document that I saw that shows that NNPC cannot go into any sort of syndicating loan within the period of that terms, right? Which means that, they can't go into any form of transaction to actually raise.
So is there a possibility, sorry to interrupt you, but given all these issues you talked about and given that this is such a high public transaction, is there a possibility that the government NNPC could revisit the terms and the structure of this loan? Because when you're in a situation where you're desperate or under pressure, you may enter into arrangements that in the long term, with the benefit of hindsight, you may think actually maybe there's some changes or things that need to be tweaked.
So which is why I believe that if you're doing that kind of transaction, you need to be the experts into sealing the transaction and anchoring the process. So you have Afrexim, then you have NNPC as the facilitator. So who are the people within?
I'm sure they would have had transaction lawyers and other advisors.
How do we arrive at those numbers?
Yeah. Well, look, we could talk about this. It's a very interesting discussion. I'd like to take you up on it more. But there are other stories we want to talk about also on Nigeria. And we'll keep watching the NNPC Afrexim transaction evolution as we go along. Is the implementation of the 50% deduction from IGR to the agencies. Tell us about the rationale behind that.
I think it's part of just the trying to get the budget efficiently done and trying to improve transparency and accountability from all the GOEs and all the parastatals. Because what they're saying now is that we need more transparency in terms of how much comes into your account. And if you increase capacity and output from your side, then we should be able to receive a certain amount of percentage going to the TSC account. And for me, I think a lot of GOEs, that's government-owned enterprises, have actually been, I don't want to use faff around, but we've been having a lot of wastage in resources, human capacity, and even the natural resources that we have. So maybe this would put a lot of them on their toes and create that efficiency that we need in managing government finance. And if we see that, it does mean that we're going to have more accretion to revenue from the government.
Which can only be a good thing.
Yeah.
Interestingly, you talk about transparency. Of course, there was a news we've been following all week about the alleged or reported remitting of public funds into a private account. But I guess this is all part of moves to sort of increase transparency.
And that buttresses the fact when they're saying, the parastatals and the enterprise actually should come out with their trial and balance statements every month.
Yes.
Which means that it has to be submitted to the Accountant General of the Federation and there'll be a lot of scrutiny to see how the performance, is being done within those GOEs. And
Yeah,
all of that.
well, great move there, I think, for accountability and transparency.
Yeah.
We need to see a lot more of that. The CBN has issued a fresh guideline of cryptocurrency. For a lot of people, either who are crypto traders, speculators, or playing this ecosystem, this is welcome news, because what CBN has done is come back and become a bit more centered in its approach to crypto regulation.
Yeah.
What does this mean for the crypto market?
Well, it just means that we have embraced the fact that cryptocurrencies and digital assets actually, come to stay.
And we embraced it. The first line there on screen, you can see banks still barred from crypto transaction. Will we ever see a day where Nigerian banks can enter into crypto transactions?
Banks being bad is another thing. You understand?
Yeah.
The fact that we're now allowing some of those transactions to grow through the banking system, and putting the regulation in place to say we need, transparency and accountability through the process and risk mechanism that's been set up by the banks. For me, is a good thing. At the same time to monitor, but they're talking about ensuring that there's no cash withdrawal from the account and there's no third-party transfer, which means that we can track whatever transaction that happened with that, whatever, and we can forestall against money laundering. And all of that.
And I think you make a good point, because for a long time in Nigeria, we've always talked about transactions and movements and inflows of money that fall outside of the system. So perhaps, this softening of approach with regulatory guidance may be an indication of a future trend. Once the CBN has deepened and enhanced its understanding of the ecosystem, we might see a more relaxed approach to it.
Don't forget again that even in US, the Securities and Exchange Commission is even trying to approve the spot ETF.
Yes.
Or, if that comes
which will
out,
allow more institutional investors.
Because if that comes out, that's a boost to the market. So we can't be running isolation from others.
Absolutely. We have two more stories to talk about, and I'm wondering whether we can combine them quickly. It's what happened in global stock markets at the start of the year, and then the US jobs figures, which I think the US stock markets reacted to. What do you make of all the shenanigans on global equity markets?
Okay, if you remember the meeting that they had last year, the Fed meeting and all of that, and it's been said that this year, especially from first quarter, there will be some level of relaxation in terms of the hawkish stand of the Fed. But when we saw the FOMC meetings communique, I think it changed the dynamics a bit. So which means that they're still thinking about the restrictive stance for economy and trying to see how much of impact that sees through over a period of time before they can now start thinking of dropping rate. And I think that's where the challenge is. So the market reaction to that was like, okay, we're thinking maybe by first quarter, we're going to see some level of relaxation, but that might not happen.
That may not happen.
And that would spook the market a bit. But thereafter, the job data came out and it was quite positive for December. And you've seen a bit of retracement from the earlier loss that was.
And I think it also just goes to highlight some of the trade-offs that monetary policy authorities have to make. But here you have positive jobs data. But they're now thinking, well, will that then trigger economic activity, lead to inflation? Should we slow down on our rate, or should we be hiking?
Yeah, because they're very, very concerned about how some of those statistics could pass through. And the Fed has actually been saying that most of their decision will be data-driven. And as long as they're looking at the data and they're saying, oh, I'm not very comfortable at this point, and we don't know how, what will happen again, considering all the issues that are happening globally. You still have the Israel, Gaza war and all of that. You have the Russia-Ukraine war that is still there and all of that. So the global economic space is still very tepid at this point. And, they have to be very careful in taking decisions that would, somehow spook the market in a way that they don't want it to be.
Of course. And, I always say, for me, my maxim this year, 2024, is data is currency. Data is key. Thanks a lot. So great to have you on this discussion, Steve Osho of Commercio Partners.